afternoon, everyone. Good afternoon, everyone, and welcome to the Invest Like a Pro webinar series. And this is the second edition. My name is Tara Mary, and I'll be your host for today's session. Ops manager with a background in building digital financial products, investment platforms, and innovation-led solutions within the financial service space. And currently at Sterling Bank, I work as a product manager, and we have OmniX, an investment application. So for those of you that are just joining and you're not aware of what OmniX is, in simple terms, OmniX is a digital investment marketplace for financial institutions, SMEs, corporates, HNI, high network individuals, and it's literally all your investments are on all your investments on your digital system, your mobile phones, your laptop, and literally whatever it is we have, you can see it's real time. Likewise, you can liquidate your maturity. Terminate your maturity as well at any point, and you get your money back immediately. You also get your investment certificate, and for what is worth, we are backed by Sterling Banks. So yes, we are a startup, but our granddaddy is Sterling. So yeah, we're good. So today on the second edition of the Invest Like a Pro webinar series, I have a wonderful guest, and I'm so eager to introduce him. But before then, the topic for today is navigating Nigeria's economic landscape, what every finance professional must know about strategy in 2026. And with me is our group head, strategy and innovation at Sterling Bank. Our speaker goes by the name Tobi Oduselu. He drives enterprise strategy and transformation, bringing deep expertise across finance, banking, and development finance. He's known for translating complex market realities into clear, actionable business strategies and has led high-impact initiatives spanning products, partnerships, and innovation. Tobi, welcome to the Invest Like a Pro webinar series. It's an honor to have you here with us today.
Thank you so much for having me, for the opportunity to share insights and for everyone to learn together. So thank you.
Thank you very much. So let's dive right in. We'll explore pressing questions that shape Nigerians and literally everything Nigerians finance and strategy in this space. So my first question is on liquidity and short-term strategy. So the CBI policies and interbank liquidity deficits rising, how should companies rethink liquidity buffers and short-term investment strategies this year? From a strategy point, of course, how should finance leaders balance defensive cost control with growth ambitions?
So I guess there's no direct answer to that. I think that organizations need to learn a bit of both. What is most important right now is how to manage cash. The kind of business environments that we have today, I think the biggest issue we have is the management of like your cash. So whether it's cost control or you're looking at growth, there has to be the most important thing to consider right now is how to keep that business going, and that comes up in how you manage like your cash flow. And so you have to ensure that you do have what is sufficient enough for your business to run first before you then talk about how to then manage like your cost control or to like approach growth. And I think that unfortunately for us, most of the businesses in Nigeria today are sort of in like that survival mode where they're still trying to like get to like a positive cash flow and get like a positive return. And so what I can say is that there's a need to be I guess more ruthless in how you manage your cash flow. The minute you identify like how much you need for your business, the minute you understand like what that business needs, that is your immediate priority. When you then master your cash flow, you can then focus on like long-term, short-term to medium-term growth. And the reason why I'm saying short-term to medium-term growth is that the landscape is very volatile at the moment. There are a lot of things happening. There are a lot of cost shifting, changing. We're approaching an election year, and so there's going to be a lot of like spending, and inflation is going to go up, and then you're going to have to now. Okay, they are also talking about policies about fuel prices. the Donald Trumps of this world and everything that is happening around the Strait of Hormuz. And so I think it is futile at this point to have like a long-term like growth strategy, but instead to focus on like how do I ensure that my cash flow is in the positive first of all. And when that happens, I can then take it at 6 months. Because right now, if I can give an example, between now and the election, we do have like roughly like 1 year. So I can have a 1 year strategy to position
Yeah,
myself
yeah.
for whatever result of the election comes up or whatever instability that then happens. And you also then know that there's a reduction in spending generally, like after an election, because for some reason politicians are still trying to like get their
Uncertainty.
yeah. So you then take it like 1 year after and then say, okay, so we can expect that the next big spending that we're going to have is going to be maybe 2028, like early 2028. And so if you have a business that you then work with like a lot of government, you're dependent on a lot of government policies, maybe now is not the time to go aggressive and chase like a long-term strategy, but instead to focus on like
True.
a short to medium-term strategy. Thank
Yeah,
you.
I like that. Yeah, that makes sense. I like that. So I'm moving on to the next question. So the next is with Nigeria benefiting from higher oil output and revenues, do you see this as a short-term fiscal relief or a structural shift that businesses should plan around?
Um, I would like to somehow disagree with the question, and the reason is that
Tell me.
I don't think that Nigeria is benefiting from the higher oil outputs, and my reason for saying that is we operate the oil market in futures, meaning we do have all, and because of the kind of leverage that the Nigerian government has had to do in the last couple of years, we are not necessarily benefiting from the volatility or the change in prices because we've sort of already like sold the oil for the next like 6 months or 8 months, and we did that. And we also then have a lot of like government assets, loan requests that are backed by future sale of like oil outputs. So I wouldn't necessarily say we are benefiting from the oil outputs and like the revenues that come with it. But what I can say is that it has positioned us it has made us to see the opportunity that can exist there, and we are more the rest of the world is paying more attention to us.
Yes,
That's what I can
Nigeria
say
is in
because
the,
we are
yeah,
not
I like that.
we're not in the volatility of the Iran path and like Asia. We are more to, and because of that, there is probably going to be subsequent investments in like let's say like the oil sector that can then drive up like our output. And to be fair again, security hasn't necessarily gotten better. It has improved, but whatever cost we have saved in the thefts that have happened over time, we have incurred it in like protecting like our structures better. So I've stopped paying attention to the price of oil as a benefit to the Nigerian economy because we've eaten our cake like 2 years ago. So
I,
because you
I
had
mean, I
like a
like
lot of
that.
so we've eaten our cake a long time ago. I think that maybe and with oil prices like going up and this thing, what it then affects is like fuel pump price. And so honestly, I would want oil prices to go down so that it
Of
doesn't then
course,
spill into
everybody.
inflation. Yeah, so that because we are paying for that increase now, not necessarily benefiting from it in quotes, if you get what I'm saying.
Yeah, I do. Yeah, I just thought back to sometime early this week. I went to a petrol station and I saw 1.9, but apparently it was diesel. So I was like, oh my God. So I panicked and I was like, and then I
Yeah,
realized, but yes, I can relate with that.
yeah.
Okay. So this question, what strategic shifts should Nigerian businesses make in capital allocation and currency risk management?
So for capital allocation, I guess this is where I would say the government has done a bit of work in that regard because the FX is not as volatile as it used to be, and so
Yes,
we are able to
thank
plan
God.
better these days. But I think that what I would then say is there's a need to consider local options first before like global options, and that's simply because if your business is in Nigeria and your revenue is in naira, there's no point have incurring your costs in like dollars or this in
Yeah,
especially
yeah.
because most of the businesses in Nigeria do not know how to factor the FX costs to their cost of business. So I can buy fertilizers from wherever I bring it from, buy my equipment from wherever I bring it from, and still want to compete in the market at the local price. And I guess the Nigerian market is kind of price sensitive. So there's that, but you have to learn how to build like natural edges for your business before building financial ones. And what I mean by that is if you want to import, you have to first find like local substitutes, find a way to like stop borrowing like in dollars or like in the exchange rates, and also recognize that because of how so recently I saw in the news that the government had placed a ban on like cement from like outside of like the ECOWAS countries. And what that means is that if I had a long-term strategy to leverage like a market outside of ECOWAS, this is the wrong time for me.
This is, yeah,
And again,
yeah,
because of that volatility, how to then plan is to first of all consider local options. There is rarely going to be a time where like the local options for like a products will not be relevant. The highest that can happen is that cheaper products can then flood the market, and that even
yeah.
gives me like better leverage in the market.
Options, yeah.
But yeah, I should always plan like around local. And if I then have products or costs that I have to incur in like FX for forex and foreign currency rather, I think the best option would then be to factor that cost into my overall cost of operations so that I can plan ahead and give myself a bit of allowance. So today, for me, if dollar is going for 1,300, when I do my pricing, I price it at 1,500 because and I do that in the short term. So I do have like a 90-day cycle, like a
Oh,
180
that's
day
nice.
cycle, and say, oh, this is what I project. So I try and do like a plus or minus so that if tomorrow something crazy happens, like we had like 2 years ago, and I see currency go in in a certain direction, my business doesn't really take a hit on it. And I think that
Yeah, yeah,
that's how to best
yes.
manage the fragile state of the FX.
Yeah, I think a number of businesses were traumatized, so everyone is
Mhm.
very scared of FX volatility. Okay,
Yeah.
so I would thank you so much for that. That was really, really insightful. I'll move on to my next questions. Well, a series of them. With global conditions tightening and domestic rates elevated, how should CFOs rethink their cost of capital and funding mix over the next 12 to 18 months? You did say, I mean, you said you plan with a 90-day series, but if we're looking at a 1 year, 1.5 year, what do you recommend?
So I think that I mean three things off the top of my head. The first would be to sort of take a look at your rates, like that's like your IRR or your cost of projects rates and your returns and your projected returns.
Okay.
I think that for a lot of people, when they factor in their adjusted return, they are not, they tend to be less optimistic. So they don't want to, but like they don't want to. So let's say your risk adjusted return is around 25%, and you think that that 25% works for you. But like because of the volatility and the changes that are going to happen, there's a need to um consider that and sort of revisit it and to constantly like check it in. I also don't believe in like long-term planning right now. And I mean, I might sound listen, but like I've been playing in the Nigerian space for close to 10 years. And one of the things I've learned is that there is nothing like a long-term planning in Nigeria because like things are constantly changing. Just before the this meeting, I was checking up the news and I saw, oh, the Minister of Finance has been replaced, and so he had certain policies an approach that he wanted to take the economy through. Can you hear me?
Yes, yes, I can.
Okay, so he had like a direction that he wanted to go, and every planning went in that direction. And then now we're going to have a different person
And
as the
you,
Minister of
yeah,
Finance who is
with the
going to
new
then come.
visa.
And this is not this is a short time before the election. So in Nigeria, things are constantly changing. And so I'm not one of the fans of like the long duration
No,
of like
yeah.
rates and this. And I think that between now and the election is a good time to plan maybe short term and to then keep your funding flexible. I guess from the FX debacle of like 2 or 3 years ago, I stopped most of the businesses about like capital from outside Nigeria and how to like
Yeah,
factor that
yeah,
in. So I don't think I need to like overflog it. But I also
yeah,
think that there are now other instruments, because a lot of people think that the best way to grow their business, for example, is to get a loan from a bank and say, oh, a bank loan. But I guess there are other instruments, private credit funds, commercial papers, and most of the things that like the OmniX platform like offers that are sort of that help like the businesses to grow periodically. You don't want to grow aggressively to the point where you don't have the capacity to manage that growth. And so what you want instead is systemic growth. That means that you can build layers upon layers. And so
yes,
as your
yes,
business
yes.
grows, so there's no need for you to as aggressive as you might want to be. I'm also a big fan of the Nigerian stock market based on the performance in the last 2 years. I know the Nigerian stock market has done like fairly well. In fact, one of the most performing like markets in the last 2 years. And I think that there's just a place in there for like investors and like people who have like capital to consider before going through like the traditional route of like looking for like FX. And I think that
Yeah.
if they are able to do that is on in the long term is good for their business.
Great, great. I like that. I like that very much. I mean, one needs to be very, what's the word? One needs to be very intentional, especially in the Nigerian market.
Yeah.
And there's so many factors to consider when making this. So yes, taking me to my next question. How do you think Nigerian companies can better allocate? I mean, you kind of partially broke it down, so I think I'll skip that one. Do finance teams need to become strategy teams, or should strategy think, or should strategy thinking be embedded differently within organizations?
Um, I I think that there's a clear line between there's a there's an intersection between finance and strategy, and
Tell me.
I think that if you're a finance professional, you should be a strategy professional as well, and that's simply because finance is beyond like control, like costs in terms of like, oh, this is naira and kobo, this is how much you can spend, this is how much you can't spend. There's a need to look at so where we were talking about like the fuel price, like oil prices. If I'm then supposed to set a target for my business today and to say, oh, this is the budget, you have to do this business has to do X amount without factoring in the macroeconomic macro indicators of it, without looking at the household spending pattern, without looking at an industry pattern, I think it would be unfair to the business for me to just cook up the numbers and say, oh, based on last year's performance, this is what you should do. So I think that in then understanding your business, understanding the climate in which you play in, understanding the global markets, and understanding like the things that can affect your business the most, you are already doing the work of a strategy analyst essentially, because you have to be able to wear like that thinking cap. And I think at the core of strategy and at the core of finance is the thinking bit of it. That's something like artificial intelligence, for example, would not give you. It can give you like reference points, but you still have to do the thinking. And the minute you start to think like a business person and thinking ownership and less of cost control, you're already becoming like a strategy. You're already doing like
Yeah, yeah,
strategy.
I like
So I
that.
think that that's
I
like the intersection between it. If you have a CFO who can't do strategy or who can't think like a strategist, your business is not going to grow. And if you have a
mm,
strategist who doesn't understand like the
finance.
naira and kobo of like that business, is not going to grow. So as I said, there's an intersection between both of
Okay,
them.
okay, okay. I like that. I like that response. I would also look into that as well, and hopefully we would expand and get that. So you spoke of AI. I mean, I know that a number of this is the AI rave. Everyone is AI in everything they're doing. Nobody wants to think and get things done for themselves. So let's talk about that. So how do you see technologies like the artificial intelligence affecting the finance industry in Nigeria? And
Interestingly,
speaking of which,
okay,
you do know that there are a number of AIs right now that do different things because you did
yeah.
speak about that. So, but yeah, go on to the question.
So I mean, interestingly, I had a conversation with someone today who works in a research organization, and he was saying that, oh, like the biggest problem he has right now is that when he gives people work to do, everybody has an opinion, everybody can write, but the most important thing is that um AI should help your work, but it shouldn't replace like the role of thinking. And I think
Yes,
that today, even though I can use AI for a lot of things, because I'm not a web designer, for example, I can ask AI to build a website for me, but it still wouldn't look
it's
like
not.
what
Yeah,
a
yes.
web designer would build. But if I then tell a web designer to use AI to build a website, they can do it faster, which then means that what I would say is the first wave of artificial intelligence and what is now more prevalent in the industry is an increase in productivity. In the
Yes.
past, I would say, oh, I want to write 10 memos and I have to sit down and write 10 memos or look for previous memos that I've written. But I can go to my chatbot and say, oh, I need a memo for A, B, C, D, and E, F, and G. Type it, address it to this person, and then gives me like 5 minutes. And so I would say productivity and like efficiency would then increase. But we have to stay ahead of the curve. I think that there's now going to be a level where redundant work in finance, in the financial industry, is going to be replaced. I do not think that AI is probably going to take like everybody's job, but I think that people will have to adapt. And the example I like to use when I talk about artificial intelligence is that in the past, when like my grandparents were like young, much younger, there were no washing machines. But there were people who did laundry services and they were washmen and they would go wash for you. And then when washing
Yeah.
machines came, washing machine didn't necessarily replace the laundryman.
Yeah.
But what he did is that he made the laundryman better at like doing
Oh,
laundry.
I like that.
And I think that that is what is going to happen with artificial intelligence. So the programmer who spends 1 month building an application can now build it in 1 week, can automate it, can build five in 1 week, depending on the speed of the AI. And so I don't think that AI would change your business. I just think that if you don't change like your own operations. So
Yeah.
if a friend of mine was talking about how like, oh, like in a customer center that used to need 55 people to send emails to customers and respond to emails, they don't need anybody again because artificial intelligence now has replaced that.
Wow.
And so the
The
55 people,
downside?
yeah, the 55 people have to either learn something new or
Oh, they
find
get
something else
like,
to do. Yeah, but like that is just one side of like the customer experience
oh,
program. So I'm not saying that redundant operations in the financial industry would
yes, yes,
change, would affect it, but I don't think that people would actually be replaced. I just think that people just need to stay ahead of the curve and know and be
yes.
the users of those that
Yeah,
software. Yeah.
yeah. I like that. I
Mhm.
like your analogy. I'm gonna use it if you don't mind.
Thank you. You're
But
free. You're free.
it's good. It's good. I like the fact that you emphasized on how first you even need to have a skill, but what AI is doing is showing the gap, making things faster, more efficient. However, it's also pushing people to expand their knowledge scope and acquire more skills and stay relevant in the market. And to be fair, even before AI, everyone keeps saying learn a new skill, and I like that. So that's great. So the future of finance. My last question for the day
Okay.
is this. So in 3 to 5, I know you did say you don't plan long term. You said that, so but
In
just
finance.
indulge me. Yes, in finance, indulge me. So in 3 to 5 years, what will differentiate finance teams that matter from those that become irrelevant?
I think that at the core of finance, Naira and Kobo will always be relevant. But I think that the approach to finance would change. I think that has been
Mm,
evolving for a long time. There was a time where if you had like a finance team, all you guys did was zero budgets and say, okay, what do we want to spend and how are we spending it? But now we have performance management. And I say in a lot of organizations, you don't have finance as a separate department. You do have it with performance management. And that is essentially because it is not enough to say we are saving the company X amount or say, but we're making X amounts. What it is in the X amounts that we are spending, what are we spending it on, and how do we tie that to the to the Y amounts we're making in like revenue? And so there's a need for what would differentiate finance teams now, let's say in the future and from now, would be the ones who understand the role of finance as per in thinking for the business and planning for the business. It will be a finance team that understands the business, that is able to embed itself in the business, not just, oh, I'm finance, you are sales, you are operations, you are this. No, it's not just producing reports from a distance, but rather knowing the business enough. Anybody who is a good finance professional at an organization should be able to run that organization. And
Yeah.
finance needs to then move from like a control function to an enabling function. Like, okay, how do I help the businesses, and how do I transform the business? Finance teams that won't be able to do that will easily be replaced, because, like I said earlier, the redundant part of your work would go. So the bookkeeping part of your work, you won't need to do that again. Nobody's going to tell you to come and build a cash flow state three statements analysis. Nobody's going to ask you to come and do, okay, I spent this amount, blah blah blah. AI would be able to do that, and serious machine learning and algorithms will be able to replace that easily. What would be very difficult to then replace would be the decision-making part of finance, or how much do we budget for this? How do we spend this? How do we tie this to performance? How do we tie this to human capital? And being involved in all of the decisions. So I want to sack X amount of people. I want to promote X amount of people. If I promote X amount of people, what is the effect of that on my bottom line? If I do this, so the serious thinking part of it is what finance is going to be. And just generally, I would say there's a need to move from like your core work to expanded roles and expanded position. And so if finance is going to be embedded in management, you have to then, you can't say, oh, I'm a finance person, I don't know management. You can't say, I'm a finance person, so I don't know technology, because then the question
True,
would then
true.
be, what value
What
do you
then?
then,
What
yeah.
value do
So
you add?
I
What do
think that,
you
yeah,
know? Why you here?
the work is going to be faster and more efficient. I've said that, but also the role is going to expand. I see in the next 5 years, I don't even see us having a finance team in quotes. What would then have is maybe a growth team that understands finance, or a change team that understands finance, or management
Yeah.
team. Yeah, so I don't even see finance like standing out in like a couple of years.
Yeah, it becomes, I like that, it becomes a prerequisite in this space. So thank you so much, Toby. I would let me just check in if anyone has any questions. Um, are there any questions, Sina? Do you have any questions for us? Okay, so oh yes, I have a question. So what do you think most professionals ignore or downplay that could make a lot of difference in their space?
Finance professionals.
Yes.
Okay, I think that a lot of businesses focus on costs, and they don't focus on like performance. What is
Mm-hmm.
the so a company can come and say, oh, we made 1 billion today, and so we're
Okay.
happy, but and then we spent 200 million. Oh, we're good. But what is the value of the 200 million that we spent? Is that the best way to like optimize that? So I think that there's a need for finance professionals to pay more attention to optimization, and to pay more attention to like sweating like the currency. And I think that that's what I would like to call it, like sweating the currency. What is the best way to use, what is the best use of our capital? It is not enough to say, oh, this, no, what is the best use of our capital? And in developing that, you become an efficient organization, not just a profitable organization. Because I mean, to be profitable is like one step, but like you cannot be, if you're profitable and you're not efficient, very soon your cost will catch up with your revenue. But if you are if you chase efficiency, at some point you would know the best use of your asset and you know how best to manage it. And I also think that finance professionals need to be more managerial in their approach to like finance, to say this is how we plan. Finance professionals do a lot of scenario planning, but you can't do a scenario planning without giving me recommendations. So you're just telling me, oh, if fuel prices go to this, if oil prices go to this, if the Nigerian government does this, what is the effect? What then are you asking me to do? What decision are you asking me to take on it? So the decision making part of it, which is the management part of it, and the optimization part of it, I think there are two things that finance professionals should pay more attention to.
Okay, I like that. Let me first throw in any other question. Um, any okay, so I have one more question. Which overlooked operational issues are likely to have the biggest financial impact on Nigerian businesses in 2026?
Which overlooked financial issue? Nigerian
Yes,
businesses.
operational issues, yes.
Okay. From my experience with like a lot of businesses in Nigeria, I know bookkeeping is one of them. Very
Mm.
while a lot of people say, oh, Nigerian banks don't like to give credit to businesses in Nigeria, the rates are high. My question to them is your business structured enough to be able to get the
Well, all the time.
credits? A lot of businesses are not well structured. And you can see the lack of financial literacy in like how they manage their books. Let me give an example. You run a business where you make like 100 million in deposit in revenue per year, and you maybe spend like 50. So you do have 50 million just laying in your bank accounts every year, but you haven't thought about making an investment with that 50 million. You haven't figured out what your net cash flow is to say, okay, to run my business, this is I need 25 million at any point in time. Meaning you have 25 million that is just always just wasting. In other countries and saner climates, they would have like an asset manager like OmniX, and they say, okay, this 25 million is always just free money. Let me put it in T-bills for 90 days, just in case something happens in the next 90 days, but I'll take it. I would then turn that to cash and then just make a lot of money on that. And so instead of by my fourth year, I don't have just 25 million sitting down, just wasting there because I'm trying to be a prudent like leader or prudent finance manager. What I then have is I've probably like increased that by like 10-15%, meaning that we then have like a lot more revenue. But a lot of Nigerian businesses don't have that on lockdown. They don't know
Mm.
how to, they don't know what to do with spare cash. And I wouldn't necessarily blame them enough alone, because there's the financial literacy part of it, but there's also the survival part of it where a lot of Nigerian businesses don't make enough money to even do planning. But the ones who do don't have once they see that there's spare money, they want to expand. They want to get a
Yeah.
car. They want to build more. They want to do end of the year party. They want to do all of those things. But like in saner climates, what happens is that that money is used for investments, and then
Or
the
investment
returns on that investment is what is then
can
used for
make
all
the
of these other
purchase.
other things, and then also like cheap source of capital that they don't like to explore. When I was in school, my finance person would tell me, if you have to use your cash for expansion, then like you're failed as a business, because there are cheaper sources of cash, there's cheaper sources of capital for your business. That cheaper sources, why use my own revenue and say, oh, okay, I have 50 million, then no, that's not what you use to expand. That's the money for, okay, your business is not going to go down. Because a typical case was during COVID. It
Mm.
wasn't a scenario that a lot of businesses planned for, but the businesses that had investments, that had other sources, could keep their business afloat.
That's
But the
what, yeah,
ones who, when
yeah.
they got the money, they tried to get another property in another city with the same like revenue that they had and the same shareholders capital that they had with them, they couldn't survive because they were now stretched thin. But those that had like a bit of buffer and used other sources of capital for expansion, they were the ones who were able to sustain it. So I think that those are things
Yeah,
off the top of
makes
my head
sense.
I
I
would
like
say.
that.
Yeah.
I love that. This session has been really, really enlightening for me, and I'm sure that our audience as well feel the same. So, on a lighter note, to wrap up the question parade, is as a financial strategist in these volatile times, what is keeping you up at night?
um, what is keeping me up at night? It's a lot.
Yes,
It's a lot.
tell us, share just a
I
few.
think that
Not
the
the
most
long list, though.
no, the most important one is I know I saw somebody say EBITDA is earnings before Trump, Iran, Trump, and depreciating assets. I think that's what is happening at the global on the global front is something that keeps me up at night. And people might say, "Oh, like that is so far." I have a tab that is constantly loading Israel-Iran US war because the strait is open today, it's closed tomorrow. You then have to then plan, okay, what is the supply like for us in Nigeria? And I know the biggest issue for me is because of the cost and the inflation that
Yeah,
causes. And the reason why that
yeah,
bothers me is I work in finance, so and I deal with like a lot of like credit analysis. I'm constantly looking at the portfolio. Prices are going up. Um, and that is a problem. Households are no longer able to afford some things, and where inflation goes up and that goes up, it means that credits and NPLs also like go up because people don't have the facilities to support the business. But the volatility that the actions of the president of the United States has like one policy changes a lot of things. That is something that keeps me up at night, and
of
I also think that
course.
because of the ripple effect it then has on spending because I'm more of a microeconomist because I look at like a lot
Mm,
of like household spending and follow up with like government spending as well and the bigger front and like transfer spending that government does. I can see that the government is not going to change how it spends, but the the cost is being passed on to individuals, and because the cost is being passed on to individuals it then affects their own like consumer pattern. They say,
yeah.
oh, okay, people can no longer afford this, and then yeah, so I think that Trump and the Strait of Hormuz is the biggest factors in my scenario planning and analysis nowadays. Well, yeah, okay, off the top of my head, that's like the most important one.
Okay, thank you so much for your question, and we'll take them towards, we'll respond to them at some point. So as we wrap up, I want to thank you, Toby, for sharing such valuable perspectives and literally everyone joining us here today. This is still the Invest Like a Pro webinar series, second edition, and we'll continue to bring together thought leaders to help finance professionals stay ahead of the curve. Courtesy of OmniX by Sterling Bank, your very own digital investment marketplace. So we look forward to seeing you at subsequent editions. And until then, keep investing like a pro.